Hello, everybody. Today we're talking about Finance 101. What are the three core financial statements and sheets that you need to know as a physician? This is so important as we change healthcare, that where we're having a lot more seniors in the system, a lot more aging population with decrease in the amount of staff. We really need physicians to be engaged so that we can reduce the costs, we can have more efficient care, we can have better patient care, and we are no longer seeing the fee for service working, and we're seeing more risk-based models coming up. So we really need to be in the know to help with healthcare transformation, be leaders in the field. My name is Dr. Elsie. I am the founder and CEO of Lead Physician Online Leadership Program, and I'm also the Chief Medical Officer of American Endovascular and Amputation Prevention. And I try to walk the walk just like I'm talking the talk. So let's just talk a little bit about finance. And I'm going to bring up some slides, and I want to give credit to our CEO, Ray Figueroa, who put these slides together, gave a phenomenal talk recently at the New Jersey Osteopathic Association for Osteopathic Physician and Surgeon. So everything you need to know, let me just go right to it here. So who cares, right? Who cares about financial sheets? Why do we even need to know? It's no longer physicians doing their jobs and going home. It's actually learning the numbers so that we can improve processes. Because if you're not managing your numbers, you're driving blind, and you're not going. If you don't set goals, you're going to go nowhere. You're not going to succeed, and you're not going to have a practice that's viable. You need to understand the numbers in order to manage your practice properly, and you must protect your hard-earned money from theft. And many of us know people who've been stolen, who've had money stolen from them. Okay, so let's go to the next slide here. So the three components, core components that you need to know are balance sheet, profit and loss statement or pro forma, and cash flow. And it's not that you need to know the inside and outsides of this in detail, is just knowing even just the basics of it so that you can understand what's going on, having conversations with the non-clinical people, and to be able to take action and be able to develop ways. We are creative beings. We're finding that physicians are so creative beyond just being scientific, ways to make things work much better. So in general, a balance sheet is a financial statement that contains details of a company's assets, liabilities, and equity at a specific point in time. It's a quick snapshot of your business's finances or state of your company, and you can run one at any time. And the most important thing is to be able to compare over a time interval, year to year or quarter over quarter. So, for instance, if you made an initial 100K investment, the balance sheet will show you the gains and losses over time. So this is just an overview of knowing what these different financial sheets are. And the three components of a balance sheet are total assets, and the equation is total assets equals total liabilities plus total equity. And then what you can do is you can learn about, just to remove this here, learn what a sample sheet looks like. And I got this from Harold Avercamp. I'm basically looking at this whole column on the left side is just assets, and the other column is liabilities and stock equity. And notice how they're equal. They're always equal. The total assets, $770,000, is equal to total liabilities and stockholders' equity, $770,000. Okay, I'm just giving the basics here, but this is kind of what we also teach at Lead Physician. We're also going to have this talk by David Norris, and I'll talk to you about his book in a minute. But a financially intelligent physician, just learning these basics and learning just what does that mean? What do these words mean? It's so simple, and you can figure it out, okay? Profit and loss statement is basically a financial statement that summarizes the revenues, costs, and expenses incurred over a specified period, also known as the pro forma income statement or P&L statement, you'll hear people say. It shows the company's revenues and expenses during a particular period, and it indicates how the revenues are transformed into net income or net profit. And the bottom line is understanding how this relates to your practice, and a lot of times it has to do with volumes of services that are rendered, whether it's exams, consults, labs, ultrasounds and procedures, understanding those volumes that drive everything, the revenue, and then understanding the costs that, that are incurred, whether it's a fixed cost or income or a variable cost. And fixed costs are like the lease, right? And the utility bills. The variable cost will be the staffing. So you have to understand what your staffing needs are in order to drive profitability. You need to have a budget. And the P&L statement will help you do that, or a target of where you want to go. You don't want to just run your practice by chance. You want to think about, okay, what do you think you'll be able to make or do during a specified period? And let's go for it. This is how many patients we need to see. This is the budget or the expenses that we need to watch. We need to watch what we're using, and we need to drive those costs down. Okay, and important points is you also need to understand how you're going to get paid. Do you have contracts with insurance companies? What are the agreements? What are the most important? What's the percentage of the Medicare fee schedule? And then how quickly are you getting paid? That's a DSO, days sales outstanding. How many days does it take to get your money back from the company? It's also called account receivables. Like, how much money of that are we waiting to receive? So understanding the P&L statement, this is just in a nutshell, these three statements. This is kind of what it looks like. Operating revenues, subtract the expenses, then you'll come in operating income, then you'll have non-operating revenue, expenses, gains. You add that all up, and then you'll have a net income. You need to know the word EBITDA. What does that mean, EBITDA? Earnings before interest, tax, depreciation, and amortization. Okay, what is kind of like the net? Investors use EBITDA as an indicator to measure the profitability and efficiency of a company. And when you're trying to sell your company, people want to look at that, the EBITDA. Okay. Valuation. People use EBITDA for valuation, like I said. It could be 3 to 5 times. It could be 7 to 14 times, depending on it. Okay. And then lastly, the cash flow statement. The cash flow statement shows the source of cash and helps you monitor incoming and outgoing money. The incoming cash comes from operating activities, investing activities, and financial activities, and it portrays how businesses spend their cash. Total cash flow equals a total cash inflow minus a total cash outflow. And that sounds very basic and understandable, right? And it provides a more straightforward report of the cash available. And why is cash flow more important than the profit statement? Because a company can appear profitable on paper, but not have enough actual cash to replenish its inventory or pay its immediate operating expenses, such as a lease or utilities or staff payments. So it's really important to understand that. And increasing your accounts receivable, okay, so increasing the days that you're receiving your cash, or the DSO, will negatively affect your cash flow. If you just understand these simple terms, learn it, be able to reiterate it, be able to listen to what people are saying, and have the conversations that are needed, this will bring you to a level that you will not expect how creative you can be a part of the team and be able to make the company function so much better. Working capital. It's an important part of the cash flow analysis. It defines as the amount of money needed to facilitate business operations and transactions. The amount of cash needed from the day you open the doors to the day you become cash positive. Here's an example of cash flow statement. Cash flows from operating activities, investing activities, financing activities, and that's your net increase or decrease in cash. And then you take the cash at the beginning of the year and the cash at the end of the year. And so in conclusion, managing your financial statements on a regular basis is a tool as important as taking vital signs from your patients. So don't run your practice or organization without oversight and intentionality. Physicians need to be in the know. If you are a leader overseeing physicians, teaching them some of these basics in finance and getting them leadership training will help them become a major stakeholder and major player in the success of your business. Because once they understand this, and once you understand this as physicians, you can be a part of it and transforming healthcare the way it should be. Have objectives, plans, and goals for the year, and hold your staff accountable. Be accountable to them as they are accountable to you. Focus on daily production and metrics. Metrics are so important, even on a daily basis. Make sure your billing companies focus on collecting your money. Make sure you know your days in AR or DSO. Make sure you've optimized your insurance company contracts with the payers, and consider sales and marketing, including digital marketing, as part of your practice. Thank you, everyone, for listening. This is Dr. Elsie Coe again with Lead Physician. If you have a topic for the podcast, write to me at info@drlcco.com and join us for the leadership program if you want to know more about this. And also, I wanted to say that David Norris wrote this book called The Financially Intelligent Physician: What They Did Not Teach You in Medical School. I highly recommend it if you want to learn more about a lot of this finance without having to get an MBA right now. Thank you, everybody, for listening. And until next week, see you then, and take care.